share with us about this 6-year adventure across 50 countries. What had you gone on that journey, and then what got you here in our real estate space?
Yeah, so I grew up in Brisbane, Australia, and then in my early 20s, I left Brisbane to go out to Western Australia to work in the underground gold mines. And I was
Oh
working
wow.
12 to 14 hours a day, 7 days a week, 8 weeks on, 1 week off, and I would cycle like that. I did that for a couple of years and saved up a big chunk of cash. And so then in my mid 20s, I decided to take off and travel the world for 6 years. And I didn't really have the whole thing mapped out. I just knew that I wanted to go to all these places and have all of these experiences. So I went over to London, set up my base camp there. That's where I worked. I was in the
Mm,
construction industry at the time. And so I would work like 12 hours a day, 7 days a week for 3 months. And then I would go traveling through Europe or Africa. And so I basically did 3 years in UK, Europe, and Africa. And then I went and did a 2 year stint over in Canada. I went from 12 million people in London to 5,000 people in a small ski village in British Columbia, Canada. And I
wow.
ended up snowboarding there, and I started my own little business out the coal mines there. And I was also a firefighter there as well. And I loved what I was doing there so much that I didn't really travel much. I just stayed in that area. I saved up a big chunk of cash, and then I took off on an 18-month surfing and scuba diving trip through Central and South America. And in the tail end of that, like after that, then I ended up coming over to the States, and I wanted to recreate this freedom lifestyle that I'd been living, except this time I didn't want to work till my money ran out and travel till my money ran out and come back. I wanted to do it building business, creating passive income. And lo and behold, I came across mobile home parks and just went really deep on it.
Wow. Okay. Now, there's a lot of different asset classes you could have choose. Why mobile home parks?
I had a strong background in construction, and I also just knew that real estate was really going to be it. I looked at all the different asset classes and I compared them all. I looked at cash flows, I looked at how much competition there is, tax benefit, how much demand there is, supply and demand. And just over and over again, mobile home parks kept popping off the page, getting to fulfill what I believe is America's number one need in real estate, the number one real estate problem. That's a need for affordable housing. Awesome tax benefits, high cash flows, very little competition. And yeah, so mobile home parks were just, I was definitely, they stood out to be superior.
I see. And what size parks do you normally deal with?
These days, we're buying portfolios. We're buying more at the kind of 200 to 300 lot kind of size. But we've bought some stuff as low as I think the smallest park we have is probably 12 spaces or something
I
like that.
see.
We usually buy portfolios. If we're buying at around about 200 lots at once or more, it ends up being pretty beneficial for us.
Gotcha. So in the smaller parks, it's common that you're dealing with mom and pop, like a very normal people. In the portfolio side, are you still dealing with mom and pops, or are you dealing with more sophisticated investors and possibly even like institutional players?
Yeah, honestly, we've been dealing with other mobile home park operators that have taken a property from 25% up to 50% or something like that. See, leading up until 2021, we were doing 70% occupied plus in our parks. We were doing what I'd call a medium or light value add, though I considered stabilized on purchase. When we saw the economic shift happen at the end of 2019, 2020, instead of dropping investor returns like a lot of other operators were doing, we actually shifted and started buying lower occupancy parks, so 50% occupied. So we buy parks that have been
Mm.
half full, and then we just take massive action to infill them. And like you mentioned before, we've got our own in-house property management, asset management, construction management, and mobile home financing as well. So we can accelerate getting from 50% occupied up to 100% occupied. And there's a lot more upside when we do that. So we've been buying off either mums and pops who are like burnt out and worn out, and they either don't have all of the millions of dollars to do the remodels, or they don't want to manage it because there's a lot of complexity to it, or we're buying it from somebody who's taken it from 25 to 50%.
I see. Okay. What states are you usually targeting?
Yeah, so most of our stuff's in the Southeast and the Midwest. My headquarters is
Okay.
in Asheville, Carolina. Most of our parks are within about a 1.5 hour drive. We've got a ton in South Carolina, North Carolina, Tennessee, and then we're also in the Midwest as well.
I see. Okay. Yeah. I wonder, I don't know much about mobile home parks, but like the ones here in Houston, they don't look very good. Versus like when I go and visit my friends in New Mexico, the mobile home parks over there look much nicer. So I guess like around the country, there's different. Yeah, it seems the mobile home park as an asset attracts different types of people that live there. I guess different demographics. What are your thoughts on that?
Yeah, I would say the common theme, no matter where you are in America, is most people are looking for affordable housing if they're living in a mobile home park. But you could have someone looking for affordable housing in Southern California, and they're still paying $2,000 a month lot rent because they're on the beach and they don't have to buy a multi-million-dollar house, so it's worth paying a couple of $1,000s a month to rent the pad. Whereas
Mm,
most the national average is about $450 per lot rent right now. So it's a very low cost of living. And then we've got a star rating system that happens in the mobile home park space. So 1 star is like an absolute dump. And then 5 stars is curbed gutters, security gates, clubhouse, swimming pools, and all of that kind of stuff. And we usually buy our parks at the 2.5 to 4 star range. And then when we buy
I
a
see.
park, we can improve it up to 1.5 stars. So we could buy it at 2.5 stars and raise it up to a maximum of 4. If we tried to take it past that, it doesn't really pencil out.
I see. Interesting. Very good. I guess it's similar to buying a Class C building, multifamily, and can get it to a Class B type of sort of.
Yeah,
Is
totally.
that correct?
Yeah,
Okay.
same thing. Yeah, totally.
Yeah, gotcha. Okay. So you mentioned, lot rentals. So is your primary strategy just to rent lots? So these people are bringing their own mobile homes on your lots?
So there's two different types of home ownership in the mobile home park space. There's a tenant-owned home. That's where the tenant owns the home. They're responsible for all of the repairs. They pay lot rent to us, the mobile home park, and then they pay for their utilities. And then we have a park-owned home, and that's where the park, we own the mobile home. We rent it to the tenants, so they pay lot rent plus home rent. So if they're paying 450 lot rent, they're likely paying 450 home rent as well, so $900 a month plus utilities. However, in that scenario, we're responsible for the repairs. So we have our own in-house mobile home financing company. So we're really cool with having park-owned homes, and we also have programs where we sell park-owned homes over to our tenants. And we've bought parks at like 100% park-owned homes in the beginning, and then we
Mm,
can phase them out. We like to exit at about 30% park-owned homes. That's usually like where we like to exit, because a lot of our exit strategy is exiting into Fannie and Freddie financing with institutional buyers, and they need to have 30% or less park-owned homes to qualify for agency debt.
I see. Okay, so it's purely for the financing side of things on your exit, not necessarily because it's less management or anything like that on your side as the operator.
So that does play a role in it as well. And if you asked most mobile home park operators, they don't want a large amount of park owned homes because you have to manage them, you're responsible for the repairs,
Yep.
et cetera, et cetera. We've made a lot of money off it, and we seem to be pretty good at that side of things. So we have a bit of a different perspective. But we know that most buyers don't want that. So we transition and get rid of a lot of them throughout the hold period so that we can open up to a wider buyer pool. Yeah. But if you
I
think about it, we've been raising rents. Last year, average across all of our parks was 17.5% rent raise. And that's on the lot and the home as well. So we're making double the profitability when you look at those park-owned homes. And we're going in there, we're buying these parks at 50% occupied. They might have 50 vacant homes. We go in and remodel every single one of them. We select the tenants. So it's a little bit different when we get to choose everything and we get to do the remodels. We know the condition of everything.
Gotcha. I see. In the self-storage space, in the last 10 years especially, institutional players have gotten in. So it's hard, unless you're buying this much smaller ones, but it's getting harder and harder. Yeah, there's much more competition because of institutional players. Has that also been happening in the mobile home park space?
Yes, in general, there's been people from self-storage, multifamily jumping ship and coming over to the mobile home park space where, hey, they can get better cap rates and they can get better cash flows in mobile home parks. So they're willing to even pay a little bit more because it's still better than the cash flow and et cetera they were having in their other asset class, because mobile home parks are at a different stage of their life cycle to other asset classes, right? So we've seen a lot of that, and that has driven up prices. There's been a few complexities that come along with that. There's been a lot of people who have joined the mobile home park space that are putting in offers, putting properties under contract, but then they can't pull the deal together and they're not getting closed. Either they had some rookie mistakes through their due diligence, or they can't get the financing, or they can't raise capital. So we've had a lot of brokers actually reach out to us and say, hey, guys have tried to close this one once or twice. We need someone who's really going to drive it home. And so then we can come in, we can get it for a bit of a discount, and we can drive it home. The other thing is that when we've been buying, and we're not necessarily going to continue buying just 50% occupied parks, it's just those deals have worked over the last few years. But buying a 50% occupied park at this scale and size that we're buying, we don't really have that much competition, because
Mm,
the people who can pull those large deals together, they don't want to deal with that level of value add and construction and everything. And the guys who are eager to do it, well, they can't pull the deal together because they can't raise that much capital and they can't qualify for loans, etc. So far, it's been pretty quiet, as very small competition. It's not like we're doing all these best and finals and there's 25, 30 different people putting in offers. There might be one or two other groups.
I see. That's pretty cool. It's like a niche you guys found.